back, hopefully. Hopefully, let me know. Could somebody let me know in the comments? I see some people watching right now. If you can see me okay, let me know in the comments where we stand with stuff. Having lots of eCam completely froze. So, we'll see. We will see. Can I get a comment out there or something to let me know if you can see this or not? Let me see where the destination. All right, all good now. You're here. Yeah, eCam, which is what I use to restream to multiple platforms. There he goes. I'm back. What? Could somebody tell me what? Did anything go through? Did anything go through on the last one? Where did it cut out? Where did it cut out? If somebody could let me know where it cut out so we can pick up there. This will probably roll a little into the open, so if you have to leave early, that's fine, but I just want to know so I don't end up repeating myself. All right, well, I'm waiting for those comments. Again, we got AVGO, Broadcom announcing the 10-for-1 split. 1,700. You live in America. I can't. All right. What happened is the place I'm living in now. You kept getting stuck at the countdown. The problem I have, it's just me. They cut the line, the fiber line running under the sidewalk, and they won't replace it. They literally, Cox will not replace it for one house. I'm the only house because the box is across the street that feeds the whole neighborhood. Everybody else goes off different feed directions except for the one cable that goes to me. They will not replace it. I have no, and they won't put in, they won't do the coax. They have to put in the fiber, which means they have to tear up the street to get fiber to this house. It's only this house. And it was cut when they replaced the sidewalk. And they didn't put in a conduit, so they can't pull it. So the city screwed up. They didn't put in a conduit, but now they won't rip up the street. And it's just one house. So that's why I have bad internet. Because I'm literally off of wireless, which I don't get good wireless here. I'm up against some mountains. I don't get good wireless, and I was planning on having good internet. So sometimes it just is horrible. It cut out during the countdown. Nothing went through. All right. So, I gave a bunch of thoughts on AI. Let me go through everything again. Oh boy. So, in terms of what we have, 37% of all ChatGPT answers reviewed by doctors, lawyers, veterinarians, and other experts were ranked untrustworthy. Are missing crucial well, I sort of went on. All right. Getting a couple things here. Yes, we're back. First off, I'm getting the feedback from people. You just got to buy it and hold your nose. Well, buy it and hold your nose is not. It's reminds me of the late stages of the .com bubble, especially with AI. It's buy everything AI. Broadcom 10-for-1 split. They beat on earnings, but they're up. What's their percentage now? 14%. We're in the absolute mania phase. Not saying it can't be traded in the short term. You all know what my thoughts are. However, know where your stops are for the medium and longer term. Because I'm talking to people, it's just you got to buy it. There's no other yield. I'm like, there's 5% in Treasury. Oh, I'm going to miss out on the upside. But then you say buy it and hold your nose. No, not for me. You can buy it, hold your nose, because things could change. We have a massive instability. I don't release the instability index. It's very proprietary, but we have horrible breadth, horrible concentration leading the markets. And a lot of it's in AI. And then here, 14% of ChatGPT are misleading. 4% are dangerous information. Remember, with AI, if you feed it in garbage, you're going to get out garbage. So, yeah, I'm getting the anecdotal information from other people that more and more doctors are like literally like feeding the symptoms into AI and relying on the diagnosis. And I mean, we got DEI dumbed down medical system too at this point. So, Coco, welcome 24 by the end of the year. Apple joined AR. Yes, we have the AI mega bubble. So we got the PPI slightly better than expected, but margins are compressing, which is not good for earnings. We have jobless claims climbing, highest in 10 months. We have the Fed saying it's probably down to one rate cut, but the market shrugging that off because it's just buy everything AI. But again, it's like the buy everything fiber or router related or networking related at right before the dot-com bubble popped. Not saying this has to pop tomorrow, just be very careful going into the final blow off mania top. And it can go longer than we think. But if there is an unsuspecting when you get to this level of instability, which has not been there since 18 years. 18 years. So I think the last time it was this unstable was getting in the end of 2006. When it's concentrated, you don't have the market breadth. You have mania fueling it. If there's any unexpected event, it could lead to problems. Other than that, it can keep going. It can keep going. So we got the bill auctions coming up. We got Fed Williams speaking, yay, after, let's see if he tries to reverse some of Powell's somewhat hawkishness. But essentially, I got away from the Fed, is we don't know what we're doing. We're just going to try to time it right. We don't know what we're doing. Again, the NVIDIA up 3%, Broadcom up close to 14.5%. Tesla up on the shareholder vote, which is not actually bullish for the stock, but people are just going to buy it because Elon announced that he'll be getting his pay package back and they'll be reincorporating in Texas. I think the judge is going to shoot down the pay package again. Group screener, technology leading the way, comm services lagging. Fed watch. We still have 2 cuts priced in this year, with the first one potentially being September. The only way I see September is if something really unexpected happened and starts crapping the bed. Fear and greed, neutral mode. And this is, I'm not using this to get, this is not part of the instability index, but even in this stock price strength, the underlying, you have a major divergence. Price going up. Stock price strength because you don't have broad rally, and breadth is falling also. I'm just showing it. It's easier to show here. We are in extreme greed mode. Can it keep going? Yeah. Can we hit? I guess we could hit NASDAQ 24. Again, things can go, but this is going to get to a mania blow off top. Schiller PE 3530. And no, again, everything is priced beyond perfection now. We got Adobe and Restoration Hardware after the close. Where are we? How is the FOMC relevant if we went from October 2022 lows and now without any rate cuts? Remember, the market was pricing in 6, weren't they? And now they might get 1 or 2 at most, because they're not getting one in July. And that leaves 3 Fed meetings for the year. And I guess they theoretically, if something really nasty happened, they could cut 3 times at most. But the market's pricing in mania at this point. Everything's fantastic. How does next week look? I'll try to get it going. I'm having so many issues with streaming. I will try to get it going because I'm still seeing around here properties. I mean, there's some selling, especially at the very, very high end. Like a really nice property, $2.5 million, can go. A lot of stuff, or at the very low end, and the low end now around here is 8 to 900,000, which it used to be the low end for those same homes in 2019. We're selling 4 to 5. They're selling 8 to 9 without any updates. And a lot of these houses, like ACs, I'll get into. They're 20 years old and they have multiple because you have to run multiple ACs out here. There's been nothing done to them, and so those are still going the low end and the very very high end to somewhat, but a lot of stuff, a lot of price cuts. But literally, here's the price cut. I'm listing for 1.6 million. It's been on the been on the MLS 90 days. I'm going to cut it 10,000. A 10,000 cut off of 1.6 million is nothing. And that same 1.6 million pre-pandemic, I've seen a lot of these sold prior pre-pandemic, sold for 700. I saw one that popped up yesterday. They bought it in December with no up. This is a new one. They bought in December for 950. They now want 1.75 million with no updates. Since December. It's stupid. You do get out of it what you put into it. And if you put crap in, let's train AI with DEI stuff. That's going to work well. You know, you start putting crap in, you're going to get crap out. And if you filter what you're putting in, you're going to get even bigger crap out. Well, I've told you what I'm doing with medium-term stuff and longer-term stuff that I don't want to hang on to. It's going into shorter-term treasuries and treasury ladders because I'd rather have cash at this point. Not saying stuff can't be traded in the short term, because stuff can be traded in the short term. It's a mania top, which can keep going. But for stuff that I don't want to hold, like if we get to a bigger dip that I don't want to hold and I'm going to get out of it, then it's get out of it. And I don't mind taking a pretty much risk-free rate of 5% on assets because I don't have to worry about the risk. And I'm talking short-term treasuries. So, again, it's a risk-free rate of return. If I say I'm trying to eke out, let's even say 5% more upside in the markets, but I'm taking a 20-30% risk if I don't time it right, it's a 5% gain for 20% risk, let's just say, hypothetically, even a 10% risk. 5% gain for 10% risk. Versus treasuries, 5% gain for 0% risk, because the government's, at least in the short term, is not defaulting. All right, we have by the way, the huge gap up is due to the contract roll. That's what the gap up is. It's due to the contract roll because you see if we back adjust it, there you go. So the contract roll is what's key here. Because we're rolling to September futures. And it doesn't have to be rolled today. It can be rolled Monday. That's based off your own. But on automatic rolling stuff, it's today. So, again, we don't even have a pause just yet. We sort of do. If I had to do little stuff if we take out after the open, I'd go off about 55.25 and 55.48, so 55.50. That's just how it would work out for me. Now remember, you got the gap because the contract roll. These still are magnets. But the support is about 5,000. If 5,000 breaks, I'm going to 54.80. I'm not angry. Am I coming across as angry? I'm just letting people know it's not stable, and it's cocoa. You can keep buying the dips, but then when do you know when to stop to buy the dips? You can still trade June till Friday, next Friday. No, they don't roll the contracts just to screw with you. They don't roll the contracts just to screw with you. It's, it's nothing to screw with you. I have on the 30 that the smaller regional banks are very stretched due to their exposure to CRE. I believe bank failure is a real potential catalyst for a bomb. Could be. It could be even separate from. It could be another event separate from anything to do with the financial sector that could roll into the financial sector then. All right. Remember, when when you have a lot of instability, I know we're open. There's not much to talk about with the O because we're just in uh, wedging up blow off area. Uh, you can have stuff when there's instability. Again, read the book Ubiquity. Has anybody read Ubiquity yet? Please let me know. I've talked about that occasionally for a couple years. Has anybody actually picked up that book and read it? I wouldn't recommend something if I didn't think it was valuable. That's where and I read that back in, I think that came out in early 2000s. That's where the instability index came from. By the way, 20,150 if the NASDAQ keeps marching higher, and 20,361. Support 19,835, then roughly 19,736. The Dow, by the way, I'm really tired, guys. I'm really tired today, so that's why it's a little lower energy. That might be sounding what's off in my voice too. I am absolutely exhausted. It's still the Dow for me to get short-term bullish has to be above 39,425. The key breakdown area is still 38,640. Russell, run up and then a rejection on that close. If we take this from yesterday, remember the Russell does not roll yet. The Russell does not roll, but spiking up and still closing below the 62.5. Just keep that in mind. It still needs to get short-term bullish, still needs above 2085. The VIX, we're back in low volatility. This is the other thing. There's a lot of volatility being sold. A lot of volatility being sold and rolled into chasing AI, which is a double whammy because if you have a very unexpected event, and again, I'm not saying this has to roll over next week. Could this keep going through the election? Yeah. But when you're selling volatility down here and literally going into concentrated AI positions, and anything happens, and that's what I'm saying. It's just like, AI is not going away. Not saying it is. But Apple, we finally hit the next harmonic, but geez, look at this move. And this is also due to the buybacks, but it's also Apple announces AI. Well, they figured out the solution. All you have to do is announce something with AI that's not even theirs, piggybacking off of ChatGPT, and we're going to the moon. Well, sir, what's the market cap? 3.3 trillion. Back to the largest company in the world. You're alive, although the heat got to me. The heat got to me. You just remember buying everything I could in April 2020, and that worked out nicely from a return perspective, especially once they they started pumping all the money into everything. Yeah, it did. When you pump $8 trillion into an economy, it'll give you nice returns. And if you look at the job numbers, like what? They're being held up by the government is the biggest hiring firm right now, if you can call it a firm. We're still running deficits like we're in a recession, and whether you call it a recession, we're not technically in a recession, but if you're running them now and we haven't even tapped out stuff, Be careful. Let's see what else is going on. The DAX still in the channeling double pattern. Not much to talk about there. The only thing I'd watch at this point is if it closes above 18,739. The notes, I'm surprised these didn't run a bit more with those PPI numbers. But you're still in the channeling double the other way. The 10-year yields, again, I would not count on this hitting all the targets unless something drastic happens, like a very unexpected event. Then it could, but other than that, so I'd plan accordingly with your stops and targets. Dollar index, still caught in the range. Watching yesterday's high and lows, which we're not going to tackle today, probably crude. This is interesting because crude, very little refilling of the SPR so far, and crude back in the consolidation range from a lot of May. With cycles at the top, I'm still watching to see if this can backfill and set up a stronger bottoming pattern. Remember, we closed right below the 200 on the weekly, but we closed above the 62.5, and the 62.5 takes precedence over the 200. I should have said that on the podcast. Because that does not change the, this changes it a bit, but this contradicted it. So I need to really see some weakness come in before I'll go target 70.21 again. Natty gas, nothing to talk about here. Still trending higher. Could get a short-term pullback. Gold, we still have the potential double in play. Gold is looking very tired in the short to medium term. Again, needs to close above about 2,400 to resume a bullish case. Silver finally officially hitting the first target on the double and the 50. So now the key area to take the rest of the targets off is a close above 31.31. Copper, not much to talk about there. Yen, very interesting. Tried to have some strength yesterday and bouncing back. This is the Bank of Japan cannot be happy with this. Still, we have the probabilities we can retest these weaker yen areas. 158.14 and then 159.18. Euro, we came down, first target hit, but still not invalidating on the closing basis the next targets. Spiders, the spiders, let's see, we've hit all our clusters right here. If I have to do short-term projections, we don't have a long pausing bar yet, but if it breaks out above 544.12, you got 547.34, 550.56. Support would be at the gap fill to yesterday's close area. Why I say close area? Because the open and close are pretty close. That's 541.63 to 541.36. And then yesterday's low, 540.30. The Qs. Oops. Dragon just keeps chugging along. In wedging vertical mode. Doesn't mean it has to stop just yet. Support area would be first yesterday's high, 476.50, then the close, 474.15. The next little pause area, we got to go to yesterday's shelf. Right around there. So you got 479.42, 479.50 area, then 483.46. Tesla off the shareholder vote. Still, major key resistance is 200. NVIDIA, I mean, they corrected the tick, bad tick, but we are now looking at 130.25 being the key area. Then I don't have any more projections just yet. We still have potential key divergences setting up. AVGO opening just above the next major harmonic, the 1700 area. Wow. That's all I have to say. And this is another. This is a mania. This is going to be a mania. Even though they beat on earnings, it's again everything's pricing it in. Just be careful out there. What else? Yeah, ubiquity. Why catastrophes happen by Mark Buchanan. That is correct. That's if you can get it from your library, get it from your library. If not, it's not expensive to buy off Amazon. Great. How can I overcome? Keep the bigger picture in perspective. Do your analysis off the bigger picture, and also if you come up with your target and your stop before your trade triggers, then you stick with it. And now when I say target, stop, initial target, initial stop, and then map out the trade beforehand, then it doesn't really matter. The only reason you'd watch it candle to candle is if you didn't accept the risk. Okay, dark screen? ES looks like a double top on the 1 hour. That's beyond double top range. You can still watch that breakdown low, but that's beyond double top range. So don't use the targets. Where do we sit? Yeah, $9 on Amazon. It's well worth the read. And it's not just about it just uses some of the stuff from the financial markets, but it's it's really fascinating. It's a very well spent $9. And if you can't afford $9, you probably shouldn't be trading the markets. So, and this is why you start to see stuff run up, and you get the underlying stability is not there. And they use the example of the sand mounds. And what happens is you don't have any pressure relieving it. And now related to this with the markets. These are little pressure relief, but not a lot. When have we really allowed this thing to properly correct? The last little bit was from January 22 to October 22. And then we had a little pullback before we got the buy signal. And this thing is just running higher. By the way, we're getting to some very toppy areas with Elliott wave and with DeMark stuff. Keep that in mind too. Again, can keep going. I would not short this market. Market maker, they make a mark there. What is your charter as a market maker? You're there to provide an orderly market, and you have to provide, if you're doing your fiduciary responsibilities, you're providing a reasonable bid offer for other market participants. Means you can't say, I don't like this market, I'm not going to provide an offer, or I'm not going to provide a bid. And you also can't say, oh, I'm offered at, I'm just going to use this as price as an example. It's different in the futures pits, but I was an options market maker. I can't, now let's just use these prices. I can't say, oh boy, I think this market's very toppy. I'm offering it 5,500, but my bid is 5,000. You can't do that. That violates, you're not a market maker then, and actually you violate your stature as being a market maker. You have to provide an orderly market. You're there, especially when the market gets more unstable. And your goal as a market maker, especially in the options world, you keep very little directional delta because you're constantly hedging off your risk. You're making it on the spread. All right, it's like the pit traders, the old pit traders that used to lean on key support or resistance levels, and they may be buying for in size to make one or two ticks or even a point, but they're keeping, if that thing turns around, they're dumping their position, so they're not going for the big hits. Again, as a market maker, you're not going for, oh, I'm gonna ride Nvidia from 700 to 1400. No, you're constantly hedging off your risk because else you can't make an orderly market. All right. I think I covered everything. Why is your biggest mistake you started trading gold? I'm telling you, gold is tough to trade in the short term. Look, you get runs and then you go into consolidation. It's the same as crude. Don't try to micro trade gold. Trade gold on the bigger perspective. If you want to micro trade, trade like the S&P or the NASDAQ or something. I wouldn't even, crude's a little better to trade on the short term, but gold is not good trading on the short term. It's great trading on the longer term. No, boy, you want the market makers around. Now, I'm going to say something else. The market making tradition, what I'd even say sometimes it's got diluted. Like everything's been financially incentivized. I think there's a lot more game playing with market making now. I think a lot of the ways the markets have lost their directions. Everything's over financialized. And people are chasing money above anything in a lot of areas of life. It's like money's become God. Let's all worship money. Anything to eke out the next dollar, even if it hurts a lot of people. And everything's being justified with like, oh, if I can get mine, then it doesn't matter. And at some point, we don't have capitalism anymore. I've talked about this. We have capital cronyism and government picking winners and losers and bailing out stuff it wants to bail out. But even separate from that, you don't even have responsible capitalism. I call it enlightened capitalism. You have no. Oh, if I can get mine out, it doesn't matter who gets hurt. Well, then you have the whole thing washes out. I saw some videos online because I'm really diving deep into the housing market because I think housing market is going to have a massive pullback. But I'm looking at some of these videos on new builds in the Phoenix area, and I'm not going to pick on any build or anything else, but there are people showing videos of these houses going into the inspection thing. The roof trusses aren't even nailed in. And this was a big thing. This has been a big thing in the Carolinas, and I will name this because it's in a lawsuit. D.R. Horton is getting nailed on that without doing the same thing. It's shoddy work. Cutting corners. Everybody out here they're saying if at least all the responsible people, not everybody, but the responsible people, if you're going to buy a new build, make sure you have it double inspected. Don't rely on the builders. Go get two separate inspectors who know how to inspect every aspect of new builds to look at it. And two, because in case one misses it, you're better to spend, because all you need is the roof trusses not to be nailed in or nailed in with one nail instead of the proper number of nails, and your roof collapses. And you had a monsoon out here, your roof collapses in 6 months or in a year. Again, that's not, you're not helping people. So that's my thoughts on stuff. And that's the thoughts with, we're at the hyper financialization of the markets. We're at hyper financialization of everything. It doesn't matter if I can eke out another dollar, doesn't matter what happens to anybody else. And it's even what that's what I started on the other stream, and I guess it wasn't working. But it's what I said. I'm getting the feedback from people. You just got to buy your nose. I mean, buy it all, buy and hold your nose. Well, why would I buy and hold my nose? Because it's the stuff stinks right now. But I gotta buy it because I gotta eke out that extra 2 or 3%. No, you don't. It's the same thing. We keep getting the currency's not backed by anything. Dollar's not going away in the short term. But the currency has not been backed since 71 by anything tangible. We've just financialized everything and it gets worse and worse and worse. Every time there's a pullback, we bail everything out. You know, you can't let anything correct. I feel like it's the ant and the grasshopper. You know, that, what is that, the fable? You know, the ants prepare every year and the sort of grab, whoa, why are you storing up your food for the winter? It's not bad. It's all, you know, blah blah blah. And then the disaster comes and the grasshopper's starving because it never prepared. It always thought everything would be fine and dandy. And in this world it has been because the government bails out the grasshopper every time. You know? The government here, the grasshopper doesn't have to prepare, just leverage all your assets. Leverage everything. At some point, that can also wipe you out. I mean, geez, they're approving loans at 56% of gross pay. So that's your take home pay. You can get leveraged up to 56% at 3.5% down. Think about that. And then they're telling people, and this is a tie into the real estate. I'm telling the brokers and stuff. Oh, it doesn't matter. You'll be, once the Fed starts cutting, you'll be able to refi. Well, you put 3.5% down. Let's say on $1 million property, you put down 35,000 down, and you're leveraged at 56% of your take home pay. You get any kind of pullback in housing. You can't refi even if rates drop without out of pocket. And gosh, God forbid that you have to take a pay cut or lose your job, or your spouse loses your job or something. You're screwed. But stuff can keep going until it doesn't. Stuff can just keep going. Doesn't mean it's responsible. At the end of the day, you got to take care of yourself and your family. And from my perspective, trying to chase something, eking out a little bit more, it's always a little bit more. You know, then we have insane politicians. Hey, Heinrich, you'll have to watch the replay. Let's see. Yeah, God, money, I'll do anything. There you go. 9 Inch Nails. Just tell me what you said. Great. Ted with the 9 Inch Nails quote. That was a good song. That's way back from the early 90s or late 80s. That's another good. Don't rely on a local inspector. They might be friends. All right. Let's see. I built a custom home in Georgia back in 2020, and they never installed the entire livable area in the attic space, yet it passed the state's inspection. I didn't find it when we went to see. It's a joke. What, you're building a home for somebody to live in. This is the problem. There's no responsibility anymore. Because why should you be responsible? And I think there should be personal responsibility and corporate responsibility and everything. But we bail out everything. Bail out everything. People will learn in time. My take is that leaders learned a long time ago you destroy the family and then you cause validation seeking behavior, which is perfect for consumerism. And we do. We have consumerism now. And boy, I'm tired of talking to the older generations. And this, I'm citing my own family. Well, as long as I die before it all collapses, I'm fine. What? That's literally a direct quote. You're fine. As long as Social Security and Medicare and Medicaid, whatever it is, all that crap, as long as it doesn't run out before I die, I'm fine. Well, what about leaving things better off? What happened to that concept? Leaving it better off for future generations? Now it's like, as long as I get out of it what I want. I went and looked at a house this weekend on an open house. We always ask, why are they selling? Oh, they haven't lived in this house in years. They bought another house years ago. They're older. And they just haven't lived, but they didn't want to let go of it yet. Well, they used the house had an outdoor workshop. They used the outdoor workshop, but they haven't lived in it for years. And now they want to get their money out. Well, you've left a home that you literally in the same town. It's not like they're out of state or anything. It's not like a second home. They literally own another home not far away, and hey, we just left it empty because. But now's the time we want our money because it looks like housing's. We want our money. Why would you even own a property? Property should not be a. This is my thing. You know what? Land can be an investment. The houses deteriorate, especially an unlived in house. But this is the whole thing. I'm gonna with all the flippers, all of this. I'm seeing properties come up again. You're asking 800 a square foot out here. Absurd, and it's like ugh. But you know what? Everybody's a flipper. Everybody's a multifamily. I gotta buy more and more income properties, and then they don't fix anything on them. They don't even maintain them. What happened to doing the right thing? There is no right thing anymore. I guess people can drop off the live stream. Well, see, dark screen, you're asking a good question. Why is the dollar going up even after weak data? When something does not break down after weak data, you got to take that into consideration. So, it could be building a base in the dollar. That's what I'm keeping an important eye on. What do I need to follow through now? It'll close above 105.11. But we could be building a bigger support base in the dollar. Keep that in mind. Keep it in mind. All right. First of all, sorry for the problems with the first stream. Thank you, everybody, for tuning in. Thanks for listening to my mini discussion on stuff. You don't have to agree with me. I'm not looking for agreement. It's just my thoughts on stuff, and I'd rather leave this world better off for other people, period, even if I'm still alive. And it's just a shame to me that we're chasing money versus everything else. We're chasing money versus everything else, which is a sad state. That's why I think the younger generation is completely lost too, because they're looking around and going, I can't afford crap. I can't even afford a home. I'm working 2 jobs, and they have no guidance. They're looking at the older generation that's chased money and everything else. Oh, we're fine. We're fine. We got our 3 homes. We're fine. What are you complaining about? Work harder. You're already working. I'm not saying there aren't lazy people out there. I'm just saying, look, boy, I'd hate to be in my 20s looking ahead or even working a decent job going, how do I afford to live in a nice neighborhood? Because it's absurd. Oh, but oh, I'm fine. What are you? Now we've stripped everything out. People, that's why we get so many friggin' riots and absurd stuff, and people trying to support Hamas. Really? Because you've lost your direction. There's nothing to believe in. There's no solid foundation in this country anymore. I don't care whether you believe in God or you're religious or something else or spirit. There's nothing. It's all getting stripped away. And when you strip it away, you get this moral decay, and then people don't know what to believe in. And you justify everything. Everything's justified. Bad behavior is justified. So we'll see if this live stream dries up completely. Because this is ridiculous at this point. Chase money, abandon logic. Roaring Baldy, don't even put me in. Don't even put me in the. That's another example of. I'm sorry, that's market manipulation. Establishing a position with a massive following and then tweeting stuff out and doing live streams and then unwinding your position. Get rid of all this crap. Get rid of it. All right. Both sides are killing each other, but you're sitting. Hamas is a terrorist organization, okay? And we support. It's like the trans people for Hamas. You know what? You go over there being a trans person, they will behead you. Okay? You're literally supporting an organization that will kill you. That's how absurd things are. I would be okay with ranting for an hour or so after the morning review mixed in with some trading stuff. This mark, there's nothing to look at today. Well, there's literally nothing to look at. We're approaching the key support area. There's nothing. This market's getting a little tired this week. What are we up on a weekly basis? This week we're up another over 2.5%. All right, with that, thank you for tuning in. Thank you for watching some of this. And I will be back hopefully a little better. I'm going to have to catch up on some sleep this weekend. So tomorrow I still might be a little tired, but hopefully I'll be well rested this weekend. And I shall talk to everyone later. Bye for now.